Well, hi guys, welcome to this Money Control live stream. It's a fairly wet morning here in Mumbai, raining cats and dogs, and of course, there's a red alert here. But of course, in terms of global cues, things are looking pretty mixed. The Gift Nifty is hinting at a positive start after the stellar rally that we saw yesterday. Although we did cool off from the day's high, but let's see whether or not we can build on that momentum and see 25,000 back on the charts on a closing basis. All in all, that was how the texture of the market shaped out yesterday. But to understand how things are looking like for today and for the rest of the day, for the week, let me bring on board Ajit Mishra of Religare Broking. Ajit, lovely chatting with you. Good to know that you're in Delhi because in Bombay, the situation is quite bad in terms of rains. But it was a deluge of gains on the Lal Street as well yesterday. What does it look like? 25,000 remains elusive. But today, would you believe that there is case for the Nifty to end above that crucial level?
Yeah, good morning, Nandita. So yes, yesterday it was needed a relief because last week, though we've ended, in positive means we gained roughly around 1% after 6 weeks of consecutive decline. But it was not very decisive move in the index till last week. It was just like, keeping the head above the water. Yesterday it was a decisive, rebound or recovery because we've crossed the first hurdle of 20 EMA, which is placed around 24,750, 800 mark, and we've tested the first resistance around 25,000 as well. So though we couldn't sustain or surpass that level decisively as the day progressed, and we've ended closer to around 24,876 area. So it seems like, Nanta, that bulls are still cautious, means they are, in a wait and watch mode, waiting for more confirmation. And it's natural considering that after almost 1.5 month of corrective tone, uh, they feel that, sustainability is the key. And, going ahead also, we believe that 24,750 now is the key make or break area. Until we break this mark, possibility of further recovery is high, but it's going to be gradual basis that IT is still in the back foot, which holds considerable weight. Banking also, we are not seeing any decisive move. Means yesterday it was less than a percent kind of move in banking index, so it underperformed the benchmark. So both these key factors, sectors, is something that they should align. At least we should see some pause in IT. Then only we can see a decisive move over 25,000 mark, which could help the index to inch toward 25,250. So as of now, yes, it's a buy and dip market as long as you are holding above 24,750 mark.
Okay, a buy on dip market as long as you're holding for 24,750. In fact, we are holding 24,70, and of course, the up move will be gradual, however. But what about autos? We talked about banks, that needs to fire up. IT, of course, has not really fired up, but autos did fire up, and they were in top gear yesterday. But would you say that the much of the GST related up move has played out, given the fact that stocks rallied 8-9%? Or do you think it's a fresh breakout? What are the charts signaling?
So yes, Nanda, in fact, if you see in past 6 weeks also, the damage was marginal in the IT pack. Means we were seeing more of consolidation in the IT majors. That's why the index was also hovering in this very tight band, close to around 23,500, 24,200 zone. And yesterday, like you have rightly mentioned, that most of these stocks were up in the range of 6 to 8%. And the good part is that majority of the counters are trading at the record highs. So within the rate sensitive pack, definitely auto is likely to outperform in days or weeks to come. This kind of indication that we have. So I doubt that it's not a single day move. Yes, we can see a pause or consolidation after a strong surge like what we had yesterday. But the tone is likely to remain positive, and stocks like M&M, iSure, Maruti, TVS, they are the one within the auto space which are likely to outperform.
Hmm. Okay, just about a minute to go for the market to open. Any recommendations? Let's get that out of the way for our viewers. What would you be
Yeah.
recommending?
Yeah. So, after this recent move, we should be slightly selective, means stocks which are sitting on the sidelines and now showing sign of strength. They were anyways were like comparatively stronger. So Bharti Airtel is one name wherein we have seen marginal dip post numbers, and now the stage is set for a recovery. So 2010 is what we are eyeing in the near future. So one can accumulate Bharti Airtel at current levels with 1850 as a stop loss. And Indian Hotel, almost after one year of corrective tone, has finally ended this phase, and we are eyeing 820 mark in the near future in Indian Hotel. So with stop at 760, one can accumulate Indian Hotel too.
Okay, Indian Hotel and Bharti Airtel, two recommendations coming in from Ajit. With that, we're looking at a positive open on the Nifty, 24,919. That's where we are. This HCL Tech Infosys extending losses. Shriram Finance, that was a good gainer yesterday, has succumbed to some bit of profit taking today. But Ajit, talking about some of these names like Bajaj Finance and Shriram Finance, yesterday they saw a good pop, right? Perhaps in anticipation of higher demand for credit, right? Any thoughts on some of these names? Bajaj Finance, Shriram Finance, which one would you prefer?
Right. So, Ananta, post numbers, we were seeing most of these stocks from the NBFC basket also trading a bit of lackluster, means they were days of, profit taking also. But comparatively, if you see that Bajaj Finance is among the top performer within the space, post this marginal dip towards its long-term averages, the stock has rebounded very strongly. We have a gap around 940, 945 area where the stock might face resistance. So we are still like decent upside, roughly around 40, 45 points up from the current area. So yes, one can continue to hold the long positions with 880 as a stop loss in Bajaj Finance. Shriram Finance, on the other hand, looks sideways to me. Means there could be further consolidation with the bias slightly on the negative side until we reclaim 645 decisively. So among these two, I believe Bajaj Finance is a better candidate. Alongside with that, smaller names like LTF and AB Capital are some of the names which one can consider, wherein we are seeing noticeable strength.
Hmm. Okay, that's the view on some of these NBFC names. But I want to talk about Reliance Industries. The stock is in focus. It's among the top gainers on the index. Hasn't really fired up in the last 1 month. We've seen 1.5% kind of a cut on prices of Reliance Industries. But today it's in focus given the fact that Reliance Consumer Products is foraying into healthy, functional beverages. Also, Reliance Jio is discontinuing its 1 GB per day entry plan. And, certain brokerages are bullish on Reliance Industries, the likes of Jefferies. Uh, they are positive on the stock. But what are your thoughts? Do you think we could see a sustained upside here on because the stock hasn't done much in the last 1 month? Before you answer, just want to give our viewers a disclaimer. We are a part of Network 18, which is owned by Reliance Industries. So if you want to invest in the stock, please consult your advisors. Of course, we are not giving a buy, sell, hold recommendation on Reliance per se. But Ajit, your thoughts on where the stock is headed from here?
Right, so Nanda, if you see that from the highs of around 1540 to close to around 1340 kind of recent lows, it's a decent correction. Means the stock retraced toward the long-term averages, formed a base, and now we are seeing recovery. Today it's a decisive day. Means we are up roughly around 2%. We have reclaimed the short-term, medium-term averages. Volumes are decent so far. So this indicates a potential of short-term trend reversal, which could help the stock to inch toward 1460 to 1480 area. So yes, one can definitely look for long positions, considering that we are seeing rotational buying across sector. So it could be a day for Reliance and maybe for a week. We can see this momentum continuing. So 1380 with that as a stop loss, one can definitely look at Reliance for long positions with 1460, 1480 as a target zone.
Hmm. Okay, that's a view on Reliance Industries. But let's also talk about some of these, OMCs. Of course, they were in focus yesterday. Today, I think BPCL was trading in the green. But we have queries on our feed on the OMC basket. This one's coming in from Debu K, and he wants to know of course, what happened to stocks like BP, HP, IOC yesterday? Of course, as I mentioned, perhaps the reason for weakness was the fact that GST OMCs would continue, or petroleum products will continue to be outside the ambit of GST. That's of course source based. Perhaps that's why the stocks were reacting yesterday in a strong market. But today we have cues in terms of the crude prices as well, right? They've moved above that $66 per barrel mark. Uh, and any recommendations or any thoughts on some of these names like BPHP and IOC?
Samantha, we feel that consolidation is more likely because, of late we were seeing that most of these stocks made an attempt to recover, means they crossed their short-term averages, but they couldn't sustain. So that holds true for the entire pack. And within this space, BPCL definitely, looks comparatively stronger, when it comes to the price action. And probably around 305, 310 is the area basically where we have the immediate support. So maybe we can see this consolidation continuing in this range of around 305 to 325. So near-term outlook is something that one should refrain from any aggressive long at current levels. In case if you have any existing position, you can continue to stay put with 305 as stop loss, and around 325, 330 zone, you should look to book profits.
Okay, that's the view on the OMC basket. Hope that answers your query. I want to get in your thoughts on another stock that is in focus, Gokuldas Exports. Now, of course, the center has removed 11% import duty on raw cotton till the 30th of September. Now, this has come as a boost for some of these exporters, right, that were already reeling because of Trump tariff tantrums. So we've seen a good up move on Gokuldas exports today. The stock is up somewhere around 3%. Last 1 month, it has shaved off 20%. But today's move has taken the 5-day move to 6% or so. Is it a good time to enter these stocks, or would you say that till the tariff uncertainties out of the way, some of these stocks are an avoid right now?
So I feel that those who are holding the long position, they can consider to hold. But for fresh buying, one should refrain because the trend has not reversed yet. Means broadly we are still seeing consolidation. Of late we have tested the lower band, and that too on a weekly chart around this 675, 670 area, and upside 775, 780 is something where we have the short term averages placed. So that could act as the immediate resistance. So for those who have an existing position, they can maintain with 725 as a stop loss, and around 775, 780, they should review their positions.
Hmm. Okay, that's the view. But before I go on and take up more queries, what are your thoughts on PG Electroplast after yesterday's up move? The stock continues to be in F&O ban as well, and we saw 35% being shaved off in a matter of 4, 5 sessions. But yesterday's move, does it signal any kind of turnaround, or was it just like a dead cat bounce, if I may say so?
So yes, post numbers, the decline was almost vertical, and now we are seeing bit of a stability. But it's still not out of woods. Means we need at least a week or 10 days kind of a consolidation, and the stock should hold above 570 area. Then only we can see some meaningful recovery towards 625, 630 in days to come. So as of now, it seems like a difficult task considering that 570 is where we have the multiple resistances, and we are very close to that mark. So fresh buying is something that you should refrain. But considering that we are seeing recovery across this consumer durable basket, so maybe close to around 515 as a stop loss, you can continue to hold your position. Around 575, you should review.
Hmm. Okay, that's the view. Those are the levels where perhaps you can review. A couple of queries on Suzlon as well. Sri Raksha wants to know whether it's the right time to buy Suzlon, and even Naveen has a query on Suzlon. The stock has been under intense selling pressure, right? Last 5 sessions, uh, 8%, even last 1 month, it has been correcting 58, 59. That's where it's perched. Do you think it's a good time to buy, or is it in a downtrend and perhaps there could be better stocks to look at in the current scenario?
Nanda, last trading session was definitely a bad one because we slipped below the long-term averages decisively with volume. So obviously now this hurdle close around 60, 61 is going to be a strong resistance area for the stock with support at 55, 52. So as of now, I believe that consolidation is more likely in the near future. So in case if you have a short-term view, you should avoid any fresh long position at current levels. In fact, you should wait for any dip around 55, 52 range, then only you should consider with 50 as a stop loss and 60-62 as a position targets.
Okay, that's the view on Suzlon. Hope you've taken note of the levels that Ajit mentioned. But Ajit, pointed query on Infosys from Gitu Sandesh. What should be done? We discussed IT stocks at length, but for the very short term, is it worth a look, Infosys?
Samantha, we have had attempts of recovery in forces also of late, but the first area of resistance around 1475, 1480 zone is something that the stock is resisting. Though we are not seeing any major decline either, so which is definitely a sign that there could be a potential consolidation, before the trend reversal. So if you have existing position, you can continue to stay put with 1410 as a stop loss. But for fresh buying, one should wait for a close above 1475, 1476. Then only we can see some meaningful recovery towards 1550, 1600 area. So as of now, consolidation is more likely, and in case if it pauses, then only it's also a positive indication for the IT index. But as of now, indications are mixed. When it comes to the IT majors.
Okay, that's about it. That's about Infosys. Hope that answers your query. But I spotted a query on Lakshmi Organics on our feed. I think it's coming in from Payal Kalra. She wants to know whether it should be held or sold at a loss. But look at the price action. Today is well up 6%. Last 5 days it has rallied 25%. Although it's still 100 odd rupees away from its 52-week highs. Should they hold on? Is it in an uptrend now? What are the charts signaling?
So no, trend is still down, and for trend to reverse, we need a decisive close about 250 mark. So still, yes, we are very close to that mark. So means we are very close to the resistance. What she should do is now to maintain a trading stop. So today's day low, close to around 220, 222, is something that you should maintain as a stop loss. And once we reach to around 250 mark, you should trail your stop loss to 240 area. In case if it surpasses 250, definitely you can hold it for 275 or maybe higher. So as of now, it's a hold, but avoid fresh buying.
Avoid fresh buying, but it's a hold. Hope that answers your query. Ajit, I wanted your thoughts on a trend as well, showing some signs of uptrend, right? 2-3% kind of a move, no big moves though. But the stock is in focus given the fact that its fashion label Burnt Toast has opened its first ever store in Gujarat, in Surat. But given the recent price action, no fireworks. The stock, of course, was a showstopper last year, but came under intense selling pressure post that. Any directional move expected, or would you expect it to remain lackluster?
Samantha, it's been almost 8-9 months now that the stock has been witnessing correction, and the good part is that of late we were seeing a bit of a base formation around 5,000 4,900 mark. The stock has recovered, and currently we are hovering around the long-term averages, and then we have a trend line hurdle also around 5,600 mark. So I believe that 5,600 is a make or break zone for trend as of now, and once let's say we surpass this level, then probably we can fill a gap on the daily chart around 6150, 6200 zone. So it's a hold again with stop at 5350. But for fresh buying, one should wait for a close above 5600 mark.
Okay, wait for a close above 5,600 mark for fresh buying on a trend. Any thoughts on DOMS? The stock has seen some correction over the last 5 sessions. I have a query here coming in from Dipankar. Hasn't really sent a pointed query, but it's not been a long time since it listed. But given the price action it has seen, or whatever data you have, any thoughts on this particular counter?
So what I remember, Ananta, that of late the company announced the numbers, and that day it moved up sharply, but it couldn't sustain those gains. And currently we are hovering around the 25-20 area, which coincides with the multiple moving averages resistance. So let's say once we close above this 25-20, 25-25 zone decisively, at least for a day or two, then only we can see a next leg of recovery, which can help the stock to inch toward 2700, 2820 zone. So as of now, yes, you can continue to hold your long position. You can in fact look for fresh buying also with 2380 as a stop loss and 2700 as the position targets.
Hmm. Okay. Those are the targets mentioned by Ajit. Hope you've taken note of them, Dipankar, and I hope that answers your query. But let's talk about Kirloskar Oil. That's one stock that, in fact, Alex has written in with a query on that particular stock, and he wants your thoughts for the long term on this particular counter. The stock has seen a 60% up move in the last 6 months. What is the long-term picture looking like here? It's 960 odd. Can it surpass 52-week highs? Because the horizon is a little long term.
Yeah, so we are seeing good base on base formation. Means it's a gradual recovery for almost 5 6 months now. Stock has recently formed a strong base around the short-term averages, and possibility of a breakout is high. So means in the next leg we can see the stock inching towards 1050 area. So yes, it's a good buy at current levels with 900 as a stop loss and 1050 as a position target.
Okay, hope that answers your query on Kirloskar Oil. But before I get on board my next guest, Ajit, I wanted your thoughts on two stocks, Vedanta and Hindustan Zinc. Vedanta, of course, considering its second interim dividend for FY26 on the 21st of August, and Hindustan Zinc has also approved setting up 10 million tons per annum tailings reprocessing plant worth 3,823 crore rupees. No direction as such when it comes to shares of a Hindustan Zinc or Vedanta. Uh, still no fire, no fireworks as such. How do you look at this duo?
When it comes to the metal pack, as of now, JSW Steel tops the list, means the stock has recently made a new record high. Yesterday also it was, gaining strong traction with volumes. Vedanta in particular means we are seeing stability, which is a good part, means at least on the down days also we are not seeing any major decline. The stock has been holding strongly above the long-term averages. So probably we can see an attempt of a rebound towards 485, 458 to 475 in days to come. So yes, you can continue to hold your longs. You can buy fresh also with 435 as a stop loss. But Hind Zinc, I feel that it's an avoid candidate because still there is no sign of decisive recovery. Nor the volumes are very, showing any kind of accumulation or something. So as of now, 445 is a strong hurdle for Hind Zinc. So in case if you have any long position, you can look to exit even at current levels and switch to JSW Steel or Vedanta.
Okay, JSW Steel Vedanta looking attractive, but not Hindustan Zinc at the current juncture. Just as we are talking about queries, one last query then. Syngene, what are the prospects? Anandaroop Bandyopadhyay wants to know your thoughts. Uh, how would you look at Syngene and Biocon at the current juncture? We saw pharma emerging as the top sectoral gainer last week, but came under selling pressure. The entire defensive lot has been under pressure in the last two trading sessions. Any thoughts on Syngene in particular and Biocon as well?
Yes. So Syngene, Nita, it was a decisive attempt to cross the major hurdle of long-term moving average. In fact, for a day, it closed above that mark also. But again, the selling pressure was intense, and we are again back to the square. Means the area from where the recovery started, it drifted toward that level. So it seems like consolidation with the negative bias is likely to continue. So I would recommend to exit this stock and switch to the counters which are trading closer to their 52-week highs within this space. And for Biocon is extremely volatile these days. Means we are seeing strong price swing in this range of 320 to 400. So after a failed attempt of a breakout above 400 mark, again we are hovering around the short-term averages. So probably a close above 370 can trigger further recovery towards 385, 390. But as of now, it looks sideways with slightly on the negative bias. Means in case if it fails to hold 358, we may again see a further drift towards 350 zone. So as of now, it's an avoid for fresh position. Existing position 350 should be your strict stop loss.
All right, that's about Syngene and Biocon. Hope that answers your query. And with that, we've come to the end of the query segment. And of course, we've come to the end of our chat with Ajit also. Ajit, thanks a lot for taking our time and joining in. As always, it's lovely chatting with you. Wish you a happy trading day and of course, good week ahead.
Thank you, Nandita. Thank you, and same to you.
Well, thanks a lot. Well, on that note, could you take a look at what the markets are doing before we get on board our next guest? Quiet, so to say, mixed picture when you look at the headline indices and the mid-cap end of the market. Nifty trading just about 18 points. Consumption names have also slipped into the red, the likes of Nestle and Eternal continues to be in the red as well. And from the auto pack, M&M has slipped into the red as well. But with that, I would like to thank you for taking our time and joining us for this whole duration of the show. I'll see you at 3:30 p.m. with Yatin on closing bell, so don't forget to tune in for that as well. But for all those who are in Mumbai, please stay safe. Extremely rainy day, of course. Red alert has been issued by IMD, so stay safe and stay indoors in case you can afford to do that. Thank you for watching, and I'll see you on the other side.